Hi, Warrior. Sorry I'm late. I think I'm late a minute. Do I need a note to excuse me? TGIF, everyone. Yesterday was a wild day, don't you think? So, hi, how are you, Paul? Yeah, I'm going to talk about the one. All right, so anyway, yesterday, one of the things I talked about was this non-confirmation in yen, okay? That it was a short. I had no idea Donald Trump was going to talk, but I tweeted out that the president must have been in face yesterday because I was talking with Blake when he was showing the wand. I said, Blake, aren't you surprised that the president or the administration hasn't said anything about the wand and, you know, currency manipulation? And then I think that interview was released an hour or so later. Anyway, risk came off pretty good. Nice break in the yen. Let's see what kind of week it's having. See if that was enough to reverse it. No, it's about unchanged on the week. So, you know, the Dixie's tough too. You know, you could say, well, we failed up there. It's still higher on the week. False breakout. They got the stops, classic stop hunt over 50, and here we are at 95. Maybe it was it. You know, it's not lower on the week. We'll see what kind of session we have. But I could also see it getting to like Andre's targets, and I remember Greg had one up at 96.20. That we could get one more push up next week. I'd say I would need more evidence to be sure this was it, and lower on the week would help. Because last week I thought we peaked because we closed, you know, had a bad Friday, but we still closed higher in the week. But right now, I guess you have to say it was a stop hunt. That may have been it. It was kind of an ugly day. And see, it didn't even really close lower. Anyway, I'd say the dollar is a pretty tough call, but you have to go with yesterday's action. But at the same time, it wouldn't surprise me if maybe next week we get one more shot up. Something I do want to talk about that tells me we're also close is what's been the big problem? What's been the big problem with the gold and something else that, you know, President Trump talked about, and I want to talk about it in conjunction with the stock market, but it's the renminbi, yuan, whatever it is. Check this out. I think it's a 1 hour. Yeah, here it is. Here's one. Here's two. And it doesn't look complete to me. So maybe there'll be something up here at 684, 685 early next week. And you could have a possible 3 drive. That's only on the 1 hour TF. You know, I'd like to have more negative RSI readings when it makes that 3rd drive. So maybe it comes down a bit because I don't like divergences that are over 70. Everyone there. And something else I thought about, you know, we're pretty good market analysts here. But don't you think the president, and I was joking, I don't know, I'll ask Stell. Stell, is Donald Trump a subscriber? Do you know? Maybe he did it under his name he used when he was promoting himself 10 years ago. He'd call newspapers with a fake name and talk about himself. Anyway, I'm not sure if he is or not, but I don't think he has to be, because do you know how many smart people he knows? You know, Icon, who after he won, came in and bought $1 billion of S&P futures limit down on election eve. So for the first time, the president was talking about he didn't like higher interest rates. He's a lower interest rate guy. And this is the first time you've really had a president talking about, you know, trying to influence the Fed. They're supposed to be independent, blah, blah, blah. But I wouldn't be surprised if guys like Scaramucci, I don't know what you think of him, but you know, he put together a huge money management firm, and I'm sure he has access to bright minds. That some of the president's friends may be saying to him that, you know, since he tied his success to a bull move in the stock market, that a lot of these guys are seeing the same cracks in the market internally, whatever, that we're seeing, and that there could be a hiccup here. And so Trump is already setting it up to be able to blame the Fed, in my opinion. And I think he did that to blame the Fed because he knows, or someone's told him, he was a troll. Someone told him that the market could be vulnerable for a pretty big correction, you know, 10% or something. So I don't think it's going to be the end of a bull market if we get a 10% correction. But, you know, there'll be people, you know, worried, and now he'll have a reason, and he'll go, well, you know, it's not my tax cuts and growth policies, and I'm bringing millions of jobs back to the U.S. It's not starting a trade war. It's the Fed. You guys get it? Give me a Y if you get it. So that makes me even more, a little more skeptical of the stock market. Think that personally, I think we could have a little more upside. I know a lot of people are looking for it to fail right in here, but look how it keeps fighting its way back. So, one of our guests last week gave a pretty good number. He's got a pretty good track record. So let me edify you. Looking for 28.28, 28.30 in the S&Ps. So that's another high. I'm thinking the NASDAQ could get to this fib extension here. 74.40 for a 1, 2, 3. I don't count this as a 1 because it wasn't a new high yet, right? So if you're going to do 3 drives to a top, it's got to happen at new highs. So a new high in the yuan, right? And one more high into next week, and I'll be probing it a little bit. So you guys with me? Those are my thoughts. Is that me, Blake? Blah, blah, blah. I'm known for that.
I don't even know what you just said.
Blah, blah, blah. That's what it sounds like to you.
No, we were saying in the chat room that that we could read all of our Skype messages on your screen as you were talking.
Oh yeah, that's right. I know there's a way to get a clean screen where that doesn't show up, but I haven't been able to find that.
Look, I'm gonna show you something, but it
all right.
See, there's
Joe, yeah. Joe.
So what you got to do is when you go over to as presenter, you have to go over with a clean screen.
Right, but I know, but I didn't. There used to be a button to get to it, but all I have is sharing in webcam, audio and webcam when I come in here in the mornings now.
Yeah, I don't know.
Yeah, well, because that's why I would do it. I mean, they finally talked me into, you know, going to the new version of Skype. Okay. And, you know, they were smaller boxes. Now it's like, it's a major announcement when I get a Skype message with the new Skype. I don't like the new Skype. How about you guys?
Oh, I haven't updated.
Yeah. Oh, well, you're smart. Don't. Yeah. Well, they said the old version's going to be coming off. So I said, well, okay, I'll do it.
Dale, personally, I have several issues with the new Skype. So although, you know, I started using it at some point, then I switched back to the old version, and you can do the same thing.
Okay.
Because it suffers from, you know, from several issues. At least it did until a few months ago.
Okay. Yeah, I want to. You know, I'm kind of like, I'm sure Blake will agree with it when I describe myself this way. You know, you can't teach an old dog new tricks. Creature of habit. So this old dog likes the old version. Anyway, so wasn't that a coincidence yesterday, guys? That we were talking about the yuan and how it kept going up, and I said I can't believe they're not barking about this at the White House. And then
Yeah,
an hour later,
Yeah, it was very, very good timing, and it's also here. Let me go ahead and I flipped over to the screen. It also is it's something that I want to say the guys from my office have been saying, like, look, that all China does and has to do is just engineer their currency lower, and it offsets all these tariffs, at least to a certain extent. And that, I mean, that's China's way of fighting back without actually
right.
They may not say anything, but they can fight back by just weakening the renminbi or the yuan. And
is this enough historical data? Is there a monthly chart on it that shows how far back it goes? Are we threatening historical highs or anything like that? Is this the lowest it's been? Because they've done it before. They did it in March of August of 2016.
We've got to 2012 here.
Yeah, okay. I remember that in August
from ICE data, yeah.
Yeah. When they did it in August, the Dow one day, it was a big drop one day, and the Dow opened 1,000 points lower in August of 2016 and recovered.
Well,
I remember that day.
Yeah, so one of the things, and I was reading a little bit of history a couple of like earlier this week regarding the same issues, actually, in the Reagan Bush era, Bush Senior era, about the trade wars that we embarked on, and the cause of the Plaza Accord, and that's when you take the yen. And Japan was our nemesis at that time. You take the yen, and I don't know. I have to go. Let me see. U.S. dollar.
I remember the Plaza Accord. That's when is that when the dollar was way too weak or strong?
It was way too weak, and
okay, right.
And so but if you look at the yen, we were trading 300 to 1 yen. And
wasn't the Plaza Accord in '87?
Yeah, so that happened right here, but it was eventually dropped. Hey, Stelios.
Hey, I just wanted to say something, just in case I'm completely wrong. The Plaza Accord of 1985 was after the dollar had been really strengthening a lot. So it was too strong, and they decided to depreciate the dollar against the yen, the mark, and that's what I remember. Maybe I'm completely wrong, but
no, that's exactly it. And so, but I don't see
stress.
Yeah. Well, first of all, I don't ever see China agreeing to allowing their currency to strengthen like like Japan did. Could you imagine? I mean, could you imagine if the U.S. dollar CNH, let's see.
The question is why would they want to do that? That's the thing.
Right.
I don't think they would, but why would they want to do that in exchange for what? And I can't think of anything.
Right.
Really, I can't.
No, me neither. And so, and I was wondering how the U.S. is going to win. So we were just kind of having a very, very minor discussion in our chat room about trade war, and like one of our traders in there, Chi, which, by the way, next Friday, for those anybody that's listening in that's in New York, if you want to come meet some of us that trade together every day, we're going to meet up in the city in Manhattan next Friday for a couple of drinks on Friday evening.
That'll be a different Plaza Accord, buddy.
It will be a different Plaza Accord. There's a few of us that are going to meet up. Unfortunately, Joe's not going to be around. He's leaving to go out of town. I'm going to meet with him earlier in the week.
That's going to be known as a tequila accord, I think, right?
That might be the tequila accord. That's right. But I was talking with a few of the guys in the chat room. And by the way, if you're in New York City, just if you're in the New York City area and you can make it to Manhattan, just email me. I'm bmorrow, BMORROW at ForexAnalytix.com, or contact us through the Forex Analytics site. You can go right here and get to one of our support folks, wherever our chat is. Our chat usually pops up. Oh, there it is. You can chat with one of our support guys here, and just drop your email address, and they'll pass it along. But anyway, what I wanted to say is I was chatting with some of the guys in the chat room, or we were just kind of chatting around. I'm like, Chi said, well, Trump's getting stuff done, and I'm like, well, he's facing a lot of the issues that no one else wants to face, and they're hard issues. I mean, trade is not an easy issue. And I have to give him credit that he is tackling it. We could argue if he's taking the right or wrong approach to the hard issues, which would be trade. My fear, personally, and I'm just telling you guys my overall fear, all right, of everything that's happening, is that we are quickly making enemies with our trade partners. As an American, I'm speaking to you guys as an American, not as an analyst or trading or anything like that. I'm speaking to you mostly as just kind of off the top of my head as an American. We are really facing a lot of we're dealing with these trade issues, which I agree are a big issue. And again, the right or wrong approach, you could agree or disagree with me. It doesn't really matter, because it honestly doesn't matter. Because whatever we say doesn't matter at all.
You know what, Blake? Nothing matters.
No, but we all are just bystanders. we just kind of go. We have to go with it and deal with whatever may come. Anyway, my biggest fear is that we are really isolating ourselves from
when we need help. There'll be no one there.
Exactly. And look, Trump is going to come and go. I mean, as much as he would like to, extend his term limit for infinity, it's just not going to happen. So whether he is with us for another 2 years or whether he's with us for another 6 years is to be seen. But the problem is going to be 10 years from now. And if, once we really, if we end up really isolating ourselves and people just go around the United States and say, you know what, I'm not even dealing with you. Oh, Bullard's talking right now. He doesn't really matter right now. I don't think he's not a voter. I don't believe. He's always so all over the map. Anyway, the problem is if we get to become too much of an isolationist, I guess, is that the right term? The problem is that when we need help, or if we need help, our partners that we're currently dealing with might not be so happy to help us, 10 years from now, or 8 years from now, or 6 years from now, with a new administration. And depending on
North Korea and Russia will, buddy.
By the way, the dollar yen is hitting new lows, and gold is spiking higher. But I'm just talking, about the damage that we are potentially doing right now. Is it, are we doing enough damage to where it really is permanently going to hamper the American position? And frankly, if we have a strong enough recessionary period, and a long enough recessionary period, where we're really, you know, taken back by all the decisions that we make today as a country. Where are we going to be, you know, like I said, 2 years from now or 6 years from now? And if we have a prolonged period of recession here in the United States, you know, we might not have the help that we need or the cooperation we need from our partners. So that's the thing that worries me the most. It's, you know, I agree that the trade issue is an issue. How it's being handled at the moment, I don't know. So anyway, it's something that I constantly think about, Dale, and I guess it's really not, you know, it's relevant, but it doesn't matter, right? It doesn't really matter what I think. But it looks like the dollar yen is coming under pressure right now. This is the chart that you would have got if you were a ForexAnalytix subscriber last night. If you would have looked at the Asian update. Here is your 1 hour chart last night in Asia. The comments were, the US dollar, Japanese yen has popped higher in Asian trade. However, the yuan fixing is at 9:30 p.m. Eastern, which may cause some volatility due to the swift nature of this move in North America. The US dollar, Japanese yen should find resistance at 112.70 before heading lower. Long-term trend favors buying dips, but below 112 may be the better play. And here we are dipping towards 112. I think we went as high as
62, I think, was it?
Yeah, 62. Yeah, so we didn't quite make it to 70, and then we rolled over, and it happened about 15 minutes after the fixing. Actually, about 10 minutes after the fixing. Actually, the reason why I know that, because I was in the drive-through for getting my kids and their friends food when it was all happening. So if you were in the chat room, I had Joe pass over a message that I covered my dollar yen short at 29, I think, is where I covered. I asked him to do that because I was mobile and I was trying to trade and text Joe at the same time, and I couldn't pull up the chat at the same time because I only have one small screen and I was trying to pay for hamburgers. So anyway, the dollar yen is making a little bit of a move. You know, Donald Trump has also announced that we might be imposing another, you know, 500 billion. Is that what the number is, Stelios?
Yeah, 500 billion. And the funny thing is that we were saying this in the chat room just a couple of hours ago. Trump announced 100 billion of tariffs, 10% and 100 billion. Then the Chinese basically, this is only on a small part of the imports, right? And then the Chinese devalue their currency 15% on everything. So, you know, I think that's Trump basically saying, you know, if you keep devaluing your currency, we're going to have to impose tariffs on everything, which kind of makes sense.
It does, because I mean this is everybody's card, right? So Stelios, since you know, yeah, I was just talking, and again, like I said, I was just talking. It doesn't really matter what I say, and it really doesn't honestly matter what I think either. We have to just kind of roll with the punches. You and I and everybody else that's here, we're not making the decisions. We, you know, can have opinions, I guess, and I'm trying not to really have an opinion on anything more than what permanent damage could be done. And what are your thoughts on that?
Well,
as a Greek and as a non-American.
Yeah, I mean, looking at it from the outside and not being involved, yes.
Right.
I said it from day one. I can't see how all this can be good for the U.S. Okay, it can't be good for both sides involved. You know, it's not that the U.S. is going to lose and China is going to win and all that, but it's just like, think about it. You know, there's 10 kids in a playground and they're playing, and suddenly, you know, two of them start fighting and start putting rules on how they're going to play. It's not gonna end up, you know, I know it's a bad analogy, but it's not going to end up positive. I just don't see it. You know, I'm very skeptical when you see trade wars and all these things. It's going to escalate into currency wars. We're already seeing that, and then who knows what's going to happen afterwards. So to summarize, I really don't see anything positive out of this. I really don't, unless the Chinese just completely cave and and Trump gets a really big win, then of course it's going to look pretty good for the US. But
Stelio, personally, I even doubt that premise. I mean, let's assume that the Chinese want to cave in. Okay, let's make the assumption that Donald Trump is going to achieve what he wants, right? Let's make that assumption. So now we have to ask the following questions. What is the end game here? I mean, what can you achieve by winning a trade war if you are the US? Does the US, as it used to do in the past, now manufacture the things that the American citizens actually need and end up paying for, and that's why they get imported? No, they don't. I mean, they have a very limited capacity to produce things. They don't produce at all several of the things they need. And even if you wanted to rebuild manufacturing, as you very well know, this is a process that doesn't happen overnight. In the meantime, what's going to happen is that you're going to have a big price increase to whatever the consumer is buying. The consumer is already stressed enough because despite the recovery and everything else, we know very well that the disposable income of the vast majority of the Americans hasn't increased. We know very well that savings are at record lows, and in a big extent, thanks to the Federal Reserve policies of the past several decades. The fact that manufacturing has left the country is also a function, also a result of
labor,
of limited savings, exactly, because, capital investment and investment in general require savings. And the US has completely, from the 80s, 70s, 80s, has completely changed its model, and it's now like an economy that's almost 3/4 based on consumption, right? But consuming, I mean, what does the US do? The US imports, and it's not only the US, but since we're talking about the US imports actual goods, and what do they export in exchange? IOUs and inflation, in essence, because the inflation that doesn't stay in the country is being exported by the form of notes. Right. So in essence,
I'm gonna keep it on the screen. It's happening in like 2 minutes. And CPI.
Okay, Blake. Okay.
Oh yeah, and then we can continue this conversation after the fact. But we're actually yeah. Go ahead, Dale.
Bottom line, no one wins a war, even if you win the war. Right.
Yeah,
Let's talk about a hot war. Even though U.S. won World War II, look at all the damage in Europe to our allies and everything. Even though we won, we still lost. There were still losses by the winning side. Right?
Okay. Yeah, you're right.
Go ahead.
Okay, I just want to say that that we're expected to actually fairly strong data out of Canada. Let me see here. I'm gonna go ahead and this is my Bloomberg. You'll see the data hit here. Okay, really fast. We're coming right into a support zone. So the Canadian's going to be, and I'm not trading this data. I don't have any Canadian positions on right now. So I'm going to sit with you guys, unless we somehow immediately dip to 130-150. There's no way I'm buying anything. That means we'd have to drop all the way down here, and I might actually think about buying the dollar Canadian. Anyway. The thing that's may pull up the dollar Canadian is if the market gets a little risk averse. Oh, here we go. Boom! Wow, that is a bad.
Oh yeah. Oh yeah. I'm still short, by the way. That's why I said oh yeah.
I just made 20 pips. I just bought it at 65, sold it at 87. Holy cow! Wow. I told you I was going to buy it down here if we got down here. I just bought it at literally at here. You can see.
You had resting orders in there?
No, I just bought it.
Oh, wow!
Yeah,
great fill.
You can see it here.
You get great fills off that platform, don't you?
So if you guys want to see what I just did just moments ago, I said I wasn't gonna buy it unless it got down there, and then all of a sudden, boom, we're down there. Yeah, so that was extremely fast. I bought it at 65, sold it at 87. Unfortunately, I didn't have too big of a position, but you can see how fast the data just came via Bloomberg, and nice. Unfortunately, Bloomberg's not cheap. for those of you that know.
Nice for both of you. Steve was short, and you did a speed of luck trade.
Since
Yeah.
the day before yesterday, actually, I'm
Are you
short.
taking it in, Steve? Taking something
No,
in?
no. I'm
Okay.
targeting 130. That was my initial plan.
Okay.
I went close to getting stopped yesterday because I would actually manually close my position if we
Okay.
closed above the 132.70 zone, but we
Yeah.
didn't. We closed exactly on the zone, and
Yeah.
now I feel quite nice because I do think that this should be a level wave C starting, and I do believe we're going to make it down to 130. That's where I'm going to take profits.
Okay. Beautiful.
Anyway, so I'm gonna sit around just for a few more minutes and continue on with this conversation with Steve. So Steve, I didn't mean to interrupt you. It's just we have this.
No, absolutely, mate. You did well because we have the data, yeah, which is a lot more important. I mean, it's
yeah. So go ahead and you continue your thoughts, and then I'll flip it over to you in here in a few minutes.
Yeah. So the thing is that the U.S. in essence are creating money to be able to run deficits, and as long as there are still partners that accept those IOUs in exchange of actual real products, everything is working fine. The question is for how long is that going to be happening? And in my opinion, because we started from the trade war, if let's say Trump achieves what he wants to achieve, I think this is going to be the unraveling of the current business cycle, right? Because, I mean, think about it. If he achieves what he wants to achieve, there are two options. You either get a pickup in inflation, very, very likely. You get a drop in consumption because people are going to be spending the same amount of money to be buying less goods. And in my opinion, this increases the chances of seeing something that hasn't happened since the 70s, which is what? Stagflation. And the question now here is the following. Back in the 70s when we had stagflation, actually the central bank had the...
Yeah, they could raise rates. Volcker took the
exactly
rates up to 20%, man.
Exactly, 21% if I remember right. So the question is, they were actually hiking in a slowing economy, but the economy could take the hit because the actual fundamentals of the American economy back then were strong. So what is, let's, in comparison, what do we have today? We have a US economy that's muddling through, right? As the vast majority of the Western economies, that has a record debt. I mean, it's approaching 22 trillion, and it's running almost a 1 trillion deficit per year, while supposedly we are still in expansion. So we still have an expanding economy, and while the economy is expanding, the US is running record deficits. So the question is the following. What is the Fed going to do if we get a slowing economy and inflation picking up? Because, as I said, let's say Trump won the trade war. Is it going to take care of inflation or the economy slow down? So in essence, is it going to help the dollar implode? Because if you keep rates at zero, or you even reduce rates and go through QE, while you also have inflation at the same time, the dollar is going to implode, right? What is it going to do? Or is it going to start hiking rates and get the US probably in what would have been as big as the Big Depression in the 30s? So, that's going to be the question. In my opinion, there is absolutely no question. We know that the Fed is affected by politicians. It didn't happen now. I mean, we didn't get confirmed because Trump yesterday made, let's just consider yesterday's statement by Trump. He said that I don't like what they're doing, but I'm letting them do it. When you say I don't like what you're doing, but I'm letting you do it,
Scapegoat.
in essence, you are implying
it's
that
a warning, right?
Yes, exactly. I mean, I can't tell you that I don't like what you're doing, but I'm letting you do it without implying that if I stop liking what you're doing, I'm going to do something about it. So, in essence, this is an indirect acknowledgement.
Another war, a war with the Fed. Another war.
And as you very well said, the Fed is going to likely even end up being the scapegoat. Now, let me be very clear. The Fed is at huge fault for almost anything that's happening in the vast majority of the economies, and obviously mostly the US economy, and the other central banks as well. Why? Because they let themselves as central bankers subsidize the let's call them stupid fiscal policies that governments were following around the world. So in essence, the central banks accepted the role of counterbalancing fiscal irresponsibility. So yes, they are at fault. There is no question about it. But in the specific case, that's not something different than what they've been doing during the past decades. I think I'm done, Blake.
Okay.
That was a monologue. I don't know if you disagree with something.
No, I mean, so, Stelios, what do you have to say?
Well, with Steve, 99 times out of 100, I agree with what he says and his train of thought. So I have nothing else to say. I actually have one thing to say, but after we finish on
the point is, I know you were talking about, explain for the listeners, Steve, stagflation.
Stagflation is a phenomenon in which you have an economy slowing down, but instead of prices going down at the same time, because theoretically speaking, under normal circumstances, when an economy is slowing down, you have demand slowing down as well. So theoretically speaking, if everything else is okay, you should be seeing price decreases. So usually a slowing economy also means, prices being subdued, so inflation going down. But there are occasions, and we've had that happen in the past, where you had a slowing economy and at the same time you had prices increasing. Usually, of course, that requires the currency to be going down fast along with the economy slowing down. And this is something that might eventually happen, because think about it. The US is currently benefiting from extremely low interest rates, but what happens if during the next crisis or the crisis after that, doesn't really matter, the confidence that treasuries are a good investment just dies. You know what I mean? Because currently the huge trade surpluses, and that's what many people don't understand. China has huge trade surpluses with the US, absolutely. What do you think they're doing with the dollars they create by trade surpluses? Let me tell you, they're buying treasuries. So in essence, they're bidding the American IOUs and helping them have very low interest rates, which for an economy that has a almost $22 trillion debt, that's extremely valuable. Let's assume that interest rates on treasuries go up to 5%. That would imply, right, that the US would have to be spending the vast majority of the tax receipts just to service the interest on its debt. So what would happen in that case? Let's assume that during a next crisis, this crisis that's going to come whenever it comes, or the next one after that, interest rates go up at the same time. What's going to happen? During a slowing economy, the US will actually have also to increase taxes because it won't be able to service its debt, or it will have to default on its debt. But the US can never default on its debt. Why? Because it's the only country on the planet that all of its debt is in its currency, in dollars. So theoretically speaking, the US can repay as much debt as it wants. But how can it do that? There is only one way: monetize all of its debt, create all of the money that it needs. But what would that make? What would that do to the currency, and what would that do to inflation? Now you understand why stagflation is actually a likely danger in the future. That's the reason. And I think that a lot of people dismiss that completely because we haven't seen it since the 70s. But all the ingredients of the mix are more or less there.
Yeah. Interesting, an interesting take, Steve. Thank you very much.
Oh, my pleasure.
I'm going to pass it over to you guys.
Let's have a look at the few charts.
Yeah. Okay. All right. Thanks, Steve. Thanks, everybody else. And I'm going to pass it over to you. I was going to say also just one last thing, a very enlightening conversation, Steve, is one of the very last things is keep in mind it is Friday. It is the British Open is happening right now. It's another reason for, I mean, I haven't had CNBC on all morning. I've been watching British Open since I've gotten up this morning. So, and I'm not going to,
like any Americans in it?
No, I was watching Rory a little while ago. I haven't seen the leaderboard recently because I've been staring at the screens, but I've had, that's what I have up, and just wanted to say that that it might continue to be a slow Friday, so you guys be careful about getting too aggressive out there. There's some talk really quick that there might be a hawkish BOJ article that is helping the dollar yen lower. I don't think that's the only thing that's moving, but I think that is that's something that might influence the dollar yen lower going into the weekend. So, and then you've got silver, it's popping here, and gold is pushing higher as well. So very oversold on the precious metals, and I'm sure Steve's going to go over those too.
Yep. I will. So let's first finish up having a look.
Good hunting, Blake, and have a great week.
Thanks, guys. Have a great one.
Thank you. I just wanted to add one thing, just in case our viewers didn't catch it. It's not a huge thing, but it was an interesting headline that came in this morning. Claudio Borghi of the Lega Nord in Italy, he said, who is actually, I think, head of the budget committee in the lower house of parliament. Something. He's basically. He said that what was it? That it might be a matter of time before Italy is out of the euro, or something like that. So it was quite a punchy statement, or something like it's just a matter of time, or something like that. So it was quite a punchy statement coming from somebody who is, in the Italian government. Just something that, in case people missed it, it's quite interesting.
Let's see what else we have coming, right? Because I think that the clouds are kind of thickening. Yeah. Anyhow,
and the market has kind of forgotten about Italy at the moment.
It dismissed it. Yeah, it dismissed it completely. I agree with you. So nice rejection today from a support resistance area. That's why I always keep support resistance area on my charts for a long time.
Great call on Canada, buddy.
Thank you, mate. Thank you.
Mr. Confirmation, that was beautiful. It looks like you did it before the confirmation.
Actually, yes, because keep in mind that I also, for me to seek confirmation or whatever, it also plays a role what kind of a position I'm going to open and what kind of a stop loss I'm going to have. So in this occasion, Dale, in essence, I had a stop loss that was less than 100 pips, which for my standards is a small one because I'm not a scalper. And I opened half a position for that reason. So it was
a probe at resistance.
Yeah, exactly. And something, if we get a rebound from here towards the 132.20 area, I think I'm gonna sell another half a position and get to a full position, and then put my stop loss above the overnight highs and let it run.
See how easy you are to copy? You're the one that's easy to copy. Just thought I'd bring that point home.
It's okay. We more than happily share some of our freebies, because people that are also in Forex Analytics know very well that by watching the webinar just 1 hour per day, it's very informative. There is no question about it. But definitely you only get a little fraction of what we do. I think that this is a good indication that we are actually going to be hitting my target at 130. I feel quite nice about it. I mean, this is a huge candle that we're seeing so far today. So I do think that USD CAD is now on its way to where it's supposed to be. Now, having to do with the metals, let me begin by saying Blake showed it yesterday late at night in the chat room, but of course not everybody's in the chat room, or not everybody might have noticed. But let's have a look here at the DSI. Yeah?
Wow, 7.
Whoop.
Even 4 weeks ago, it was pretty low at 15, but now it's half of it.
Yeah, 1 second. Let me fix a little bit. Okay, this. Okay, let's redo it. So, look at this.
Yeah.
Look at the DSI in the metals. 7, 7, 10, 16, 7, right? So the DSI is like at extreme levels. There's no question about it.
Yeah.
Look at the DSI in the dollar, Dale.
Yeah.
92, right?
Yeah.
Extremely
It's
bullish.
the opposite of where it was 6 months ago, 5 months ago.
Yeah,
Yeah.
exactly. In the exact opposite, as you said it, in the very
Yeah.
exact opposite. So
Lost you, Steve. Nice
Steve,
candle.
did you hit mute?
those are things that we need to. Oh, I didn't. Can't you hear me?
Okay,
Now
we
we
can
can.
hear you now. We can hear you now.
There you go.
Mm.
Yeah.
Yep, we can hear you now.
So just go back to what
Okay.
you were saying about gold before, because we didn't hear what you said
Okay.
about gold.
Let's have a look at it. Yeah, gold. As you see, it's making a good effort to rebound from here. I mean, it's we're currently testing channel support, and so far we're seeing something like a tweezer bottom.
So
we
maybe
have
back to the breakdown, Steve, like 1243 or something like that, the major channel line, maybe.
Listen, I still need. Yeah, we might make it back up there, but to be honest, I would still be a little bit worried. I mean, there are some downside targets that we still haven't touched, like the 1,202 and the 1,100.
I think Rega had 1618 at 1210, though. I think that's what Blake mentioned earlier in the week. The 1210 was on the blog at 1618.
Oh yeah,
Grega's gold blog.
Yeah, absolutely, absolutely, and we might see a rebound from there. Silver
there.
also looks beaten down.
Yeah.
But keep in mind that even if silver rebounds higher, I would be looking at this 1575 level. I think that's going to be a major level of resistance.
My hair keeps losing value. My silver hair.
Say again, Dale. Sorry.
My silver hair keeps losing value. But it's not losing the hair. It's only losing value, but not losing the hair.
Very true, very true. So copper is also moving lower. So far today, it's an inside day, so it is some likely signal of reversal, but with definitely more evidence. There is also a potential descending wedge here in the copper, if you say. So this is another thing I'm monitoring here. But I have to tell you that we still haven't hit the double top target at 256. So I have to be very honest. I mean, I do see potentials of reversals, but until we get confirmation, I still see downside targets that haven't been fulfilled. And for example, if we go to platinum, especially platinum, which is also decently correlated with risk, because we have to acknowledge that, you can see that, sorry, palladium, you can see that palladium actually completely crashed yesterday. It sliced through the 900 area of support, and it made an attempt to rebound today, but it's already giving back its gain. So I think that palladium still looks quite bearish. By the way, as long as we're speaking, USD yen is sitting the bed. Sorry for my expression, but it's sitting the bed. So I think that it's on its way to the 111.50, which we had said that is going to be likely a nice area of support, since it's a double confluence of supports. So be careful. I think 111.50 is going to be an important level. If we do see a rebound from there, okay, that's going to be a good sign that it remains well bid. But if we actually do crash below 111.50 once again, I think that's going to be, it's going to mix things quite a lot, right? On the other hand, if we want to be looking at risk, the S&P is now retesting this 2790 area as support. As long as it stays above it, it's obviously bullish. There is no question about it. Now, if we actually slice through it, then we open up once again the 2690 area for a retest. But unless we break below 2690, I would be very, very cautious with trying to fade risk. So, I have to say that I would be very cautious trying to fade risk as long as we're above 2690, right? Now, Nasdaq, as we've said, has stalled that double confluence of resistances at the 127% extension. But one more thing I wanted to say, I wrote it yesterday on the chat room as well, that the DAX has stalled this nice confluence of resistances, the 61.8 fib from the last move lower and the 200 DMA. And today, by accelerating lower, more or less we get confirmation that was an important resistance. That's exactly what I drew yesterday. So I do think that it's on its way. Now, how low we're going to find out, but I think we're going to at least retest the 12,400 area. The FTSE is still struggling to break through this descending channel. As long as it doesn't, it remains in a consolidation. And the Nikkei, as warned, has given us another rejection from the 23,000 area. So, having to do with a bull bear line here, it's very clearly defined. It's simply the 23,000 area, because 23,000 has rejected. This is the third time it rejects recently the price action. If you go a little bit back in the chart, you're going to see that this was multiple times support resistance. And I do think that the Nikkei is going to keep is going to go back to being bullish only and only if it starts trading above the 23,000 area once again. Until then, I think you should be quite careful with it. We might see another push towards the 22,000 area, or we might even go lower from there. Obviously, that's going to be highly correlated with what the USD yen does. So let's first see USD yen slice through 111.50 if that happens, so we can then be more optimistic that the Nikkei can produce more downside. Now, having to do with the cable, there is only one likely bullish interpretation here in the cable, and that's the following. It found support yesterday at the 127% extension of the last little rebound here. At the same time, this was a retest of this descending wedges resistance, this time as support. And on a daily closing basis, because that's also something that we have to consider, on a daily closing basis, the cable never managed to close below 130. We did trade below 130 yesterday, but we did not close below 130. So in essence, we've also held this horizontal level, this horizontal area support. So, there is still a hope for the bulls that we're going to get a rebound from here instead of going down to the confluence of supports at 128.50 before looking for a rebound. But still, I would think that it's too early to make such an assumption. I think we need to remain cautious. I think we need a lot more evidence to actually start talking about possible reversals. For the time being, the only thing we have is some very, very early and immature indications. So I want to make that very clear. Now, on the other hand, you see the nice rebound in the Euro USD. The Euro USD, once again, because this is the multiple time during the past couple of weeks, is retesting this descending trend line support. Obviously, if we break above it, it's going to first open up the 118.50 horizontal area of resistance as a likely resistance, right?
Look how much off the low it was, Steve, compared to the Dixie making a new high. That's kind of unusual.
A divergence.
This is the euro. That's its second higher low. With
I
the
agree
dollar
with
index. It was kind of a tell, don't you think?
I agree with you, and not only that, if you want to take it a step further, and on occasion you've seen me do that in the past, let's switch this chart to a line chart. What does a line chart do? A line chart shows us only closing prices, right?
Yeah.
So if you want to take it like this is the third higher low, right? Because this was a lower low than this one.
Okay. Yeah. So it's shown a lot of relative strength with a strong dollar, is the point.
Yes, and having to do with the DXY, since you mentioned it, yesterday I was showing that the DXY is likely breaking out of this triangle, but this is the beauty of it, and this is why I'm so persistent in looking for daily closes before I make decisions. I mean, for example, yesterday at some point, USD CAD was trading above the price that I had indicated that would be my stop loss. As you know, I've said it many times, I don't actually use, I very, very rarely use actual stop losses. They're just mental stop losses, right? I'm saying to myself that this is the level I want to be out, but I want to be out if we actually close on a daily closing basis above that. Because intraday, you see a lot of spikes. For example, look at this DXY chart. Yesterday, it was breaking out of the triangle, right? Very clearly breaking out of the triangle. What did it happen? We got a reversal during the day. A very bullish candle turned out to be quite a bearish candle because it ended up being a pin bar, like a shooting star, albeit being white in color. And today, we're seeing continuation of that long upper wick that we left behind yesterday by moving lower. So in essence, if you bought the breakout on an intraday level, you're now holding the bag, while if you waited for a daily close, you never got trapped being in the wrong direction, right? So, so far we still remain trapped within this triangle. So is this a reason to be bearish? No, it isn't. Why? Because we're still in a triangle, and we're still in a triangle that has, a very decent amount of chances to break to the upside. But, only if we do see a break below the triangle support, then we will start having to talking about something else. But regardless, what looked like a bullish breakout that was coming, got invalidated. So at the very least, we remain trapped in a range. So I think more patience is needed there before we can call the DXY before we can call a likely reversal in the DXY or a continuation. We remain in a triangle. Triangles usually break in the direction of the trend. So, it can still break higher. There's no question about it, but it's not happening yet. Okay, so let me see what our friends wanted to see here. What could you use bull silver close today? Zach, really, I don't think that silver can close bullishly today. I mean, can close bullishly. Let's say the following. Something, because it's beaten down severely, right? I think that on a daily basis, it would show very bullish signs only if it managed to close above 1560. Because that would leave behind quite a bullish candle. It would actually completely erase yesterday's losses. But in all actuality, I want to be honest here, I wouldn't be buying silver as long as it remains below 1575, no matter what. So, for me, it's not only about what kind of candle I would want to see today, but it's also about what kind of level I would want to see broken. And, at the very least, at the very minimum, I would want to see 1575 break to the upside once again, before even considering that. Yeah, I'm glad you agree, mate. Someday talking about your overall trading approach and strategy. Actually, Nick, I'm making a video about my trading approach and strategy, and that's going to be one of the videos that are going to be on the ForexAnalytix video store. We had planned to release the video store a lot sooner, but we focused mostly on releasing the new platform, and I think that was a good idea because a lot more people benefit from the platform. And I'm making a video that's going to be on the ForexAnalytix video store about my trading methodology using conferences. I'm actually going to make more than one videos using conference reports. Grega has also Elliott Wave videos that he's going to be doing there. Stelios has made nice macro videos that are going to be there. Andre is gonna have some videos about harmonics. So I think you will be able to find very interesting and useful material there. Let me see.
USD SEC failed at 78.6 yesterday.
The
other day when the dollar was making new highs, I kind of brought up, look at all the dollar pairs that weren't making new highs. Of course, Canada was one of them. The Swiss was one of them, and USD SEC was one of them.
Keep in mind, Coach, that we have this ascending trend line. You can see how important it is.
Yeah.
So I think we should definitely refrain from jumping the gun.
Wait for confirmation.
Yeah.
Okay.
Exactly. So yeah, you're absolutely right with what you're saying. We haven't seen a higher high here, but I think it's too early to call a reversal here as well.
Okay. Thank you.
Same deal with the USD NOK. Yesterday it penetrated through 820. It actually accelerated. It's now pulling back, but still, I mean, it's too early to call for something different.
It's acting stronger than the SEC. The NOK.
Yes, that is actually right. So let me see what other questions we do. We have an interview, coach, today?
No.
Okay, we don't have an interview. So, guys and girls, any other questions that you have, I'll gladly cover them. Let's have a look at crude. I have a couple of more things to show, and if I see any other questions, I'm going to cover them. So, crude, very simply and very basically, there is still potential for more downside towards the 66 area, as long as we trade below 70. So as long as we trade below 70, there is still the potential for one more low towards 66. 66 is a very powerful triple confluence of supports, right? It's this horizontal support resistance area. It's the 78.6 of the last move higher. It's this ascending trend line that within a few days is also going to be exactly there. So 66 key for the trend. But as long as we remain below 70, there is a decent chance that we're actually going to test that level, because usually such confluence of supports or resistances also more or less act like magnets. Okay. Euro pound. Yeah, we have a question about Euro pound. Thank you for bringing that up, because I think I forgot to show it yesterday as well. Euro pound has actually made a big move. It has finally, after a long period of time, I mean, after September, broken above this descending channel. But as I said the day before yesterday when we were looking at it, it is breaking above this descending channel, and that's a very important step. But at the same time, we have this confluence of horizontal resistances at 89.70. So, and it's also a confluence with this ascending channel. So personally, before buying it, before considering buying it, I would want to see a break above that area. So we're getting very close to that. We're approaching this 89.70 area of resistance. I think that if we break above that as well, then we open up, a lot more upside. So that's my view. But be careful, because we're almost there. We're almost at resistance. So I think buying it up here is probably a bad idea, because it has a decent chance of reversing in your face, right? Euros is still trapped in the triangle. Euro Kiwi is still trapped in the triangle, so we need to be a little bit more patient with those. Pound Aussie, currently testing horizontal support. I think it's a little bit more mixed, so I won't be doing something with that at the moment. Pound Kiwi, on the other hand, I like Pound Kiwi, among the crosses a little bit more than the rest. Why? Because Pound Kiwi actually retested this broken wedge as resistance and is moving lower. So technically speaking, it looks, I mean, from the euro and the pound crosses, I think that Pound Kiwi looks the cleanest, but the best looking one having to do with technicals is probably the pound yen, because it behaved perfectly. I mean, we were expecting a likely retest of this broken channel as an ABC, for example, and it's getting rejected from there. So I think it looks it's one of the most promising yen crosses from a technical perspective, right? Possibility of a short, sure. Whenever Abdul, whenever you get a very strong resistance coming up, of course, there is always the possibility, there's always the opportunity of trying to fade that, because you always have the benefit of having a very tight reward to risk ratio. So if you want to short the euro pound, at least you know where you're wrong, and it's just a few pips away, right? So you can always play it like that, but it's that's purely up to you. I mean, your trading decisions, your trading style. I can't tell you what you should or you shouldn't be doing, because it's not that I don't want to do it. It's simply because if I tell you what to do, that's going to be influenced by my style of doing things. But my style of doing things is also a factor of other things that have to do with my trading mentality, with my account size, with the leverage I'm using. So you can't just take some of the elements of somebody's trading style and trying to implement it on yours, because other things might not match. Okay, coach. I think that's it, more or less. I think we can call it a week, and we'll be on the chat room for the rest of the day, obviously, as always.
Okay. All right, Steve.
So thank
you
you
very much.
for a nice and productive week.
What a great team. So, guys, if FACE is helping you, the way to show your appreciation, since it's free, is to pay a little something to become a subscriber. And then when FACE is over and you want to know what Blake is thinking, Steve's thinking throughout the session, you're going to have access to ask some questions then. So join ForexAnalytix, also contact Trent and Justin at Forest Park FX for a brokerage solution or a secondary account. And with that, remember, most of all, don't just count your pips, count your blessings. Money comes and goes. Time is gone forever, my friends. Make it count. And I'll see everyone on Monday. Have a great weekend. Adios.